All right, so continuing on with our study of trend continuation trading, I've got a much more complicated scenario for you here, and I hope that we're at a place where we can kind of talk about this more difficult stuff. Depending on how this goes, we may, and how the responses get, I may move this to a little later in the course if this type of stuff is just too complicated at this point. But you guys are sharp people, and I'm sure you'll get it. So let's walk through it here. Now, first of all, what's the first thing we got to do? We got to identify, are we in a bullish or bearish, right? What is the signal that we should be receiving here? And that's the first problem that we have in this particular case, because the market's been bearish, right? Then we rallied, broke structure to the downside. Then we rallied, lower high, higher low, boom, break of structure, right? So what is this signal to us? Market is sending us a signal, right? Sending us a signal that market wants to go higher. Right? Then what happens? Then the market pulls back. We get a retest of the high, double top. Then the market breaks structure again, violating structure here. We didn't get down in to retest the highest high here, or sorry, the highest close here. So we didn't quite come back down in and retest. We've had a double top. Now the market may be telling us it's bullish or it's bearish. Then we rally again. And now we find ourselves in this area here where the market's sideways. So I ask you, are we bullish or are we bearish? Well, here's the thing. Right now, we're in a form of unstructured consolidation. At this point, the market is not in a trend. It's choppy. And we have to go back and we have to look at the last swing high to swing low that the market traded in. So in that case, we've got a high coming in right here, and we've got a low coming in right here. And what has happened in between there? Nothing, right? There's been a double top trading opportunity here. There's been a potential 2618 in here, although this double top didn't happen at a new structure high. I'm betting, well, we did go overbought there. But you see what I'm saying? This double top here, this retest of the high, happened inside of this swing high to swing low move. It's happening inside of a consolidation area. Doesn't mean there's not places to make money, but it's confusing, right? It's like, okay, do I take the trade? Do I not take the trade? And the question is going to become in your rules when you encounter this is, all right, I'm in a period of unstructured consolidation. Market is moving inside of this last big down leg of the move. Am I going to take trades inside of here? I'm going to tell you right now, this is the perfect place to look for pattern recognition. Advanced APT stuff, advanced pattern recognition, beautiful inside of here. But what about if you're a counter trend trader, which we'll talk about in the next series of videos? Are you going to take your counter trend trade here? Are you going to take your 2618 trade? I just want you guys thinking about this stuff. Because when you start to write out your trading plan, these are the types of things that you're going to encounter. So for the purposes of this, I just use that as an example to kind of show you guys some of the difficulty that you run into with making decisions in real time in the market. Let's assume for the moment that we recognize this for what it is, which is unstructured consolidation. We're trend continuation traders, right? We're not worried about anything else, pattern recognition, counter trend trading, all that stuff's later. We are TCT traders, trend continuation. The market did not give us a trend continuation trade here, and now it is clear we are in this period of consolidation inside of this move. And so we make the decision that we are not going to choose to get long or short to execute a trade until the market violates one of these two levels. That's the smartest move, right? Because the market clearly is not in trend here. And although there may be opportunities to buy or sell inside of this move, we're looking for continuations of the trend. Remember what the theory is behind what we're trading, right? We're banking on this notion that the market is moving in an organized, repeatable pattern. And if the market is not doing that, do we want to be trading? Most likely the answer is going to be no. So what we've got to do now is we just got to sit on our hands and wait for a break of structure here. So I go back into my bar tick replay here. Again, just an awesome feature to have when you're training. And what are we waiting for? Now the market breaks structure again, still inside of that consolidation. And guys, don't be afraid to use these lines on your charts. They're there to help you. I guarantee you, with the number of hours it takes for some of this stuff to play out, it is helpful to cycle back to a chart the next morning and have these lines in there and be like, oh yeah, I remember what I was doing there. Yep. Otherwise, it's like you're staring at an empty page and you've got to kind of remember all your analysis. If you look on the side here at all the different pairs that I trade, as I'm cycling through these, if I don't have some annotations on my chart on what I'm looking for and what I was doing, I'd be lost. I'd forget about the analysis that I did the day before, and I would not be able to follow this many pairs. If you want to, use your text tool. Write a text in here. Say, hey, in consolidation, no trading, something like that. Right? Let's keep moving on forward here. Waiting for it, and boom, there we get it. There's the breakout. Now that we've broken out of this structure level, what are we going to look for? Well, now we're looking for our trend continuation trade. What do we have? Now we can draw in some of our lines here, and we can see, oh yeah, we've been bearish here. Boom, boom, back down, retest to the high here. Boom, then we break down again. Market comes back up. We didn't quite get up to retest this previous structure level, did we? And then the market rolls over. Boom. So now what are we looking for? Now we're looking for most recent structure, area to get short. Look left, structure leaves clues. Boom, there's our previous cycle bottom. Here's our previous cycle top. 85.25, go 85.35 for stops. Remember, we're just doing our analysis ahead of time. We don't know where the market's going to go, but when we work off these higher time frames, it gives us lots of time to think and do analysis. If you're starting out trying to learn this stuff on a 5-minute chart, man, you got to be Johnny on the spot in order to get anything accomplished, and you're likely going to make mistakes. And so by doing it this way, it really gives you a chance to identify what you're doing ahead of time and prepare for it. So that's why I say higher time frame charts when you start. Now, moving right along. Market starts to rally. Now we got to ask ourselves some questions, right? Let me see if I can go one more just to make this easy. Okay. So now we got to make... Let me see what I can do here. All right, so now we're coming close here, right? We've almost entered this trade. We haven't quite entered it. Let me zoom in here. We've almost entered. Now, what's our question? The question is, where are we going to take profits? Well, you remember in the last video, we looked left and we really ignored this structure low here. And I did that. I was hoping that you guys wouldn't notice that I was doing that. But the reason that I ignored that is because it was so close to our entry and we had a really nice structure level looking left. In this case, look left. You see any structure out here? There's nothing out here. There's nothing for us to base this trade off of. There's no place to look for a potential swing high and swing low. And this market really did a nice job of violating these lows here. So I'm going to have to look at my initial target being somewhere around these previous swing lows. And what do you guys notice? Because I've got no other structure that I can base a trade off of here. There's nothing here. I'm going to consolidate. Look at it. There's nothing out here. I'm going to have to go all the way back here to find any kind of structure down here that I could use. And even that is, I mean, that's just junk. We can't, there's no clear structure level in there for us to use. So we're forced to use the most recent structure level here. Now, what do you notice here? Risk. We've got entries, stops, and targets. Now, what do we have to look at? Risk to reward. Try and even this up a little bit, make it right. Now, what do we notice here? Our risk to reward is inverted, isn't it? We got too much risk and not enough reward in this trade. So what do? Well, option one, don't take the trade. Just say, you know what? I got to have a one-to-one risk-reward profile. Previous structure doesn't give me the opportunity to get involved in this trade, so I'm going to skip it. I'm going to move on to the next one. The problem is, I don't like that because there's plenty of good trading opportunity in here. And so I ask myself the question, well, why can't I just, if I'm talking about entering on a limit order here, why don't I just move my limit order up? Now what have I done? Now I'm looking at a risk-reward that's in my favor. And all I did was just moved it up to the next structure level. Beautiful, right? Now I've got a risk reward that works for my trade. If the market will come that deep in, I've got a decent setup here. So that's exactly what I do. I'm not going to leave this trade just because, the risk reward is wrong. I've got all of this. This is all potential reversal area, right? This is all kill zone in here. I'm saying the market can come anywhere in here and it's still okay. Nothing wrong with that. It's only if we violate these swing highs that I'm going to concern myself and going to consider this trade to be invalid. And so why wouldn't I just roll it? Why would I leave it here and say, why would I just leave it here and say, it's not going to come all the way. You've got risk reward doesn't work. We got all this bare space in here where the market could reverse into. Why don't we give ourselves a chance at having a profitable trade? So I'm just going to roll my limit orders up to 85.09 or whatever it is, 85.10, and see if I can get that market to come all the way up there. At that point, hey, now we're looking at a really nice risk to reward trade. In this case, again, I think you can guess what's going to happen here because I'm trying to crawl, walk, run. It doesn't do a lot of good to show you a bunch of losers, does it? We want to see stuff that actually pays dividends. So now the market rallies up, rolls over, trades sideways. Again, you guys, when you're doing your back testing, you got to pay attention to this stuff, all right? So we entered at 8 o'clock in the morning, 9, 10, 11, 12, 1, 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock in the afternoon. Still trading sideways. Now we're at 9 o'clock at night, and we're still monitoring the trade. Boom. Finally, at 2 o'clock in the morning, we hit our targets. Now what happens? Well, if I'm just trading one in and one out, we're done. I took all my profits off right here. Stops were never at risk at being hit. Just modified my entry a little bit to give me the risk reward that I needed, and now I'm out of the trade with profit. The nice thing about doing it this way is it's fire and forget, right? You don't need to worry about rolling your stops. You don't need to worry. It's just, hey, I either hit the target or I don't hit the target. So when you enter at 8 o'clock in the morning, my guess is you're probably still not awake at 2 o'clock in the morning. So when you use this method, you don't have to make sure that you're up every hour or every 2 hours to monitor the trade. You can set this up, forget about it, you can go to sleep, and then if you're really concerned about it because you got a lot of money on the line, you can set an alert to send you an email. And I've been awakened in the night more than once with an alert hitting my phone telling me, hey, something just happened. And what I tended to do was take a look at my account, make sure the order got placed correctly and that I was completely flat in the market, and then I would roll over and go back to sleep at night. That is one of the downsides of a 24-hour market. The upside to that is I never get caught in a position where the market, gaps massively unless it's a weekend. So I limit the amount of time that the market is closed and can gap against me. So that's the simple way to do it. Now, what's a more complex way? A more complex way would be to look for some extended targets, right? To look for a little more money in there. Because this is a trend continuation trade, right? What are we expecting? Well, we're expecting the market to break out of these lows, right? We want it to continue in the trend. And we want to be able to capture all that money in the trend. So, in this case, look at what happened the very next candle. Now think about mentally what you're going to be dealing with if you thought about exiting here and you exited your position here according to your rules. In the very next candle, you see the market drop from 84.74 another 60 some pips in the very next candle. Boy, that'll make you throw up a little bit in your mouth, right? That'll cause you to rethink and say, hey, maybe I want to plan this a little bit better. Maybe I want to have the opportunity to capture some of that profit. That's what we're going to cover in the next video. I'm going to show you how you can do that using some extended targets and a couple of different methods that you can use for grabbing those targets.